This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Commodity crush. It's not just oil. Iron ore, aluminum, steel also getting slammed as the decline in prices takes a toll on companies and markets worldwide.
In jeopardy, late reports tonight that Yahoo may not go forward with its spinoff of Alibaba, raising questions about the future of its CEO, Marissa Mayer.
And dangerous habit, the one thing that's becoming a bigger risk on the road than texting while driving. All that and more tonight on Nightly Business Report for Tuesday, December 8th. Good evening, everyone. Another triple-digit loss in the market today, but we begin with late developments tonight on one of the world's biggest internet companies, Yahoo. It seems one of its core strategies may be unraveling. CNBC's David Faber first reported that the tech company may not move forward with its long-planned spin-off of its multi-billion-dollar stake in Alibaba. That's the giant Chinese internet company. It will instead examine a deal involving Yahoo's core internet business. An official announcement of the change could come as soon as tomorrow. Shares of Yahoo moved higher initially after the report. The moves raise a host of questions. They come to mind, and John Ford is here to answer them. John, welcome. Why did the board step in here and make this change in a long-held strategic plan?
Taxes, Tyler. It comes down to taxes. There was an activist investor, Starboard, just an investor pushing them at first to spin off Alibaba because it's worth so much. And then when the U.S. government wouldn't say, yes, we'll let you do this without getting taxed, they said, wait a minute, more and more it's looking like that's too risky. If we have to pay a tax bill on selling that off, we'll lose a whole lot of value. Instead, why don't you sell the core business? Yahoo has not yet made it clear that it's going to sell Yahoo, the core business. But that's what a lot of investors think could be the endgame here.
What does this mean for the CEO? Because this had been rumored, planned for some time.
It had, and I think the question is, if Yahoo gets broken up, is there some piece that continues to be independent? If so, is it big enough that Marissa Mayer sticks around and runs that? If Yahoo gets bought by some larger company, does Marissa continue running Yahoo? Does she rise up in the ranks of that company? None of that is clear until we hear more about what Yahoo plans to do. Is it offering itself up for sale? Is it soliciting bidders? Is it trying to keep the whole thing together, or is it willing to break itself into little pieces?
Its stake in Alibaba is how big?
It is sizable, and I don't remember the number.
Tens of billions, as I recall.
It is.
Is this a victory, then, for the activist investors, for the Starboards and others who have been agitating from within the company? At first, they say, get rid of that $30 billion stake or whatever it is. Now they say, well, wait a minute. Maybe we don't like the tax bite there, so we should change. Are they calling the shots?
It's a victory in a huge way, because one of the things that's characterized Yahoo over the past 15 years is this fierce desire to remain independent. I mean, it wasn't too long ago, actually it's been a while, a decade, Microsoft wanted to take Yahoo
that's right.
out.
Yes.
Yeah.
Jerry Yang insisted that not happen. Now, Jerry Yang, also an investor in Alibaba. Now he's gone on to be a board advisor. It was announced just today of Didi Kuaidi, which is an Uber rival in China that's doing quite well. He's done well as an investor. It seems like Yahoo is warming to the idea of being more investor-friendly with its core business. Does that go all the way to it no longer insisting on being independent? We'll have to see.
Your best guess. Is it an independent company in 2 years?
My best guess would be no.
John Ford, thank you. You answered. Appreciate it.
Great to have you with us, John. Thanks. And now to commodities, which continue their dramatic decline. And it's not just oil, which remains around $37 a barrel, but also iron ore, steel, aluminum, and pretty much every hard metal. And the impact is being felt globally. Anglo American, one of the world's largest miners, said today it is cutting 85,000 jobs and selling 60% of its portfolio. Just one example of the toll the rout of commodities is taking. If 85,000 job cuts doesn't get your attention, the descriptor will. British miner Anglo American, the world's fifth biggest mining company by market value, says it's planning, quote, radical changes. Founded back in 1917 by Ernest Oppenheimer, Anglo American says it will sell off 60% of its assets, cut spending by more than half next year, and suspend its dividend, the latest example of what's become a rout in commodities. Anglo-American warned profits will be down at least 20% this year, joining Swiss miner Glencore among the worst stock performers in the UK lately, both down more than 70% on the year. These are stunning drops, especially when taken on top of the fall in energy prices. S&P 500 energy companies, just energy, have given back almost $360 billion in market cap this year. But energy is not the whole story.
The infrastructure got built out to satisfy or try to satisfy China's what was seen as almost insatiable demand. If they can come back, these commodities will come back. But for now, we're just flat on our backs.
Almost all commodity producers are in trouble as well. 15 of the 19 core commodities in the Thomson Reuters Global Commodities Index are down this year. The only positives are agriculture-related sugar, cotton, orange juice, and cocoa. Anglo-American says it expects to continue digging for metals such as copper, bulk materials like coal and iron ore, and diamonds. But demand is down in all of these businesses, and so are jobs. Here in the United States, despite its somewhat healthier than the rest of the world job market, employment in mining and logging was down more than 1% last month. For the year, mining and logging have dropped 124,000 jobs so far.
I think it's a full palette of elements here for the bears to pick from. And if it's not one thing, if it's not the OPEC meeting falling apart, then it's bad Chinese trade data.
What these sharp losses in commodities are telling us is that this isn't just oil or an energy issue. The numbers say we are seeing a big slowdown in the global economy.
In a rare interview today, the CEO of Chevron described the energy market as being turbulent. Classic understatement there. John Watson told CNBC's Brian Sullivan that the sector is adjusting to lower prices by cutting supply, that capital investment will be cut, and that he sees oil prices trading higher 1 year from now.
There are adjustments that are taking place in the business. If you look in the United States, production has fallen 500,000 barrels a day in the last 6 months. If you look at the capital that's being withdrawn from the business, hundreds of billions of dollars are being taken out of the business right now. But what you're also seeing is some companies are finishing projects that are under construction. So that's temporarily adding to supply. But once those projects come online and as people absorb the current prices, you're going to see production drop in many parts of the world.
Do you believe that? I mean, because every time the U.S. comes down, maybe Iraq goes up, or Iran goes up, or Russia goes up. We've got 11 million coming out of Saudi Arabia that we know of. There are countries and companies, John, as you know, that need to keep producing. Why are you so confident that we will see supply drop?
Well, there is a natural decline that takes place in our business. So as you pull investment out, oil fields decline over time, and every country is going to have to make choices. Many of the developing countries of the world that produce oil have a choice between meeting the fiscal needs and internal needs with revenue versus reinvesting in the business. And I think you'll see that capital is gradually withdrawn. We've seen that happen in some companies in the Middle East, and we've seen that happen in the United States. The market and investors do respond to the price incentives that are out there, and we will see production come into balance.
Watson also said Chevron will do what it must to make money at whatever oil's market price is, and that the stock's dividend is safe.
That worsening commodities rout weighed on the major averages in today's session for the second day in a row. The Dow Jones Industrial Average fell 162 points to 17,568. The Nasdaq was 3 points lower, and the S&P 500 dropped 13 points.
In Washington, Congress is taking a close look at the proposed merger that would create the world's largest beer company. Anheuser-Busch InBev wants to buy SAB-Miller for more than $100 billion in a deal that would control a third of all beer sold worldwide. And today it was clear that the combination has some very staunch critics on Capitol Hill. Hampton Pearson reports.
So I hope you got it.
There were no cold ones on the table when Senate lawmakers began to examine the proposed $100 billion merger between the world's two top beer producers. Anheuser-Busch InBev has offered to buy SAB-Miller for $107 billion. CEO Carlos Brito says the merger is needed to expand the AB InBev brands in the rest of the world, not just the U.S.
The purpose of this transaction is to enhance our ability to serve new markets, particularly in Africa, Asia, and Central and South America. It's about bringing more choices to more consumers around the world.
In hopes of winning regulatory approval, the merged company will spin off the Miller brand to Molson Coors, a major divestiture that also keeps alive the Miller versus Bud rivalry here in the United States.
The divestiture of Miller Coors ensures that our market share in the U.S. will not change as a result of the combination.
Lawmakers want to ensure competition from the 4,100 craft brewers, a nationwide industry that continues to grow. The main concerns from those brewers, the distribution and pricing power of AB InBev and the SAB-Miller combination.
If you want to grow your business as a craft brewer, if you want to get your beer into a chain store, if you want to get your beer into the stadium, you need to use the Anheuser-Busch distributor or the Miller Coors distributor.
Antitrust enforcers at the Justice Department will make the final decision on the merger, and they've been saying no to a lot of deals lately. 77 deals worth some $263 billion abandoned so far this year, according to the Wall Street Journal. The ranking Democrat on the antitrust subcommittee says there's a reason for the resurgence.
So it's not like they're turning down every merger. It is more that I think you're seeing so many mergers and they're being diligent in doing their job, and they must.
Critics of the deal are calling on Anheuser-Busch and SAB-Miller to make even bigger concessions to deal with concerns about competition. For Nightly Business Report, I'm Hampton Pearson in Washington.
From beer to burritos, the Chipotle outbreak is growing. As we reported last night, a number of Boston College students fell ill after eating at the chain. Today, it appears the norovirus may be to blame, not E. coli. But the bad news continued to pressure shares, which fell again today. Morgan Brennan reports on the outbreak and its potential fallout.
Investors aren't the only ones steering clear of Chipotle.
I've actually noticed that the Chipotle in my office, the line's gone way down.
More health woes continue to hit the Tex-Mex chain, which since mid-October has battled an E. coli outbreak confirmed in 9 states, affecting 52 people, according to the CDC. Now, college students in Boston have become the latest to fall ill after eating at a Chipotle. Boston College says 80 students have reported gastrointestinal symptoms after consuming food at the company's Cleveland Circle restaurant. Chipotle closed the location is looking into the incident, which a spokesman says may not actually be E. coli, but instead, quote, likely a norovirus, which also seems to be the direction health officials in Boston are moving. No E. coli cases linked to Chipotle have been confirmed in the state of Massachusetts, and the company believes this could be an isolated incident involving a different illness at a specific store unrelated to the broader E. coli outbreak, a suspicion backed by a recent report of health code violations at the Cleveland Circle restaurant. Still, the stock fell again today, down more than 15% since early November, when the first E. coli cases came to light. Analysts say each incident raises more questions about the company's supply chain and whether the situation is out of Chipotle's control.
But the stock has always been priced for perfection, and one small hiccup in that process can cause a big downturn in the stock, and that's been the risk. And that's what we've had. The stock has dropped from over 700 to almost 500. That's a big loss in value in a short period of time for one of what looked like a very small isolated event, but now it's 2 events.
Indeed, as health officials continue to look into the E. coli outbreak, the food culprit behind it has yet to be identified. Last Friday, Chipotle warned that same-store sales could be down dramatically this quarter, with earnings also markedly lower than analysts had anticipated. And it could get much worse because with every report, consumers are becoming increasingly skittish, even here in Manhattan, a market that has not been affected by E. coli or any other foodborne illness.
I was going to go there probably like last week, Wednesday, and the person I was with was like, oh, did you hear about they had something wrong with their food? And I was like, maybe I'll have a salad.
For Nightly Business Report, I'm Morgan Brennan in New York City.
So how much damage will the crisis at Chipotle do to the company's brand, not to mention its stock price? Here to discuss this is Dean Crutchfield, a brand expert with his own firm, the Dean Crutchfield Company. Mr. Crutchfield, welcome. Good to have you with us. How does Chipotle come back from this? What do they need to do?
It's a big question, I mean, is this a close shave or a deep cut? That's what the big debate's about. How far does this go? The stock price might rebound, maybe. We hope so. But the public has a memory that can last forever, and the public can make or break a brand. So they are absolutely the focus for Chipotle right now. It's putting the public at ease because they've been let down and there's fear.
How damaged do you think the brand is?
I think the damage is, you can repair this damage. It's a question of how they go about it. I haven't really seen enough to satisfy me regarding Chipotle's response. I believe all channels of communication should be wide open, and Els, the CEO, should be speaking a lot more without being beached on a sludge bank of corporate puff. So it's about communicating to everybody in every way, from video to statements. This needs to be done across all channels. A good example was Mattel, some years ago with the lead scare, opened up 300 channels of communication within 24 hours. Where is Chipotle?
Beached on a sledge bank of corporate puff is the best phrase I've heard in weeks, Dean, and we love you for it. So the first thing it seems to me that they need to do is figure out what the heck happened in those cases of E. coli, because unless you can explain that and say that you fixed that problem, you have a hard time winning back trust, don't you?
You do. And this is a leadership problem. Leadership's about turning the hard into the possible, and that's seriously the case here for Chipotle. That leadership needs to come out. They need to identify what's going wrong. But here's another thing. Who's responsible for this? We need to know who is responsible for this catastrophe, because that's all about accountability and transparency. And at the moment, it's not there. People kind of want to know there's a witch hunt going on to find out what the problem is.
You say turn your customers into representatives for the brand. How do they best do that?
They do that by getting them to talk more, and that's what I mean by all channels of communication. Get to where people are comfortable. Get to where people are accessing their information. It doesn't just have to be Facebook. There's lots of other channels of communication that can be done. But the public, in a sense, are a brand's best friend. They're like the reps of a brand because they talk about it, because they like it, because they love it. Now, a brand is about recognition. It's about association and loyalty. The last thing that Chipotle wants to be recognized for is a bad process when it comes to handling food. I mean, that's its business.
Very quickly, would you take your children to Chipotle tonight?
I wouldn't out of principle that there is a concern, but if they really loved it, I might itch them to do it.
All right. Dean, thank you very much.
Thank you.
And don't get beached on a sludge field of corporate puffery. Dean Crutchfield with the Dean Crutchfield Company. Come back anytime, man.
Thank you, mate.
Still ahead, a new danger on the road and behind the wheel. Online lender Prosper reportedly made a $28,500 loan to San Bernardino shooter Syed Rizwan Farouk. As first reported by Reuters, the FBI is examining the couple's financial activity before the shootings. Prosper says it is prohibited by law from disclosing any non-public, personally identifiable information on any loan originated through its platform.
A new survey of drivers shows they're more distracted than ever before. They are not just texting and driving, they're surfing the web. Phil LeBeau has the story.
Most drivers know the dangers of texting and driving, but they still do it. In fact, a new survey by State Farm found drivers are not only texting, they're using their smartphones to do a whole lot more. More than a third of those surveyed admit they text and drive, while almost as many are now surfing the web while behind the wheel. And there's also a sizable number of people taking pictures or recording videos while driving.
There are probably a number of reasons why someone might choose to either text or visit sites on the internet while they're driving. We did ask folks when they're more likely to do that, and they reported while they're stopped at an intersection, which may seem fine because your car is stopped, but federal data shows us that 40% of crashes are at intersections.
Mullen believes drivers are doing more on their phone because their phones can do more. In other words, it's easier and quicker to get on the internet through a smartphone, so more people are doing it while driving, even though many surveyed admit they know it's a dangerous decision. Last year in the U.S., almost 33,000 people were killed in auto accidents. While drunk driving is responsible for almost a third of those deaths, almost 3,200 people were killed in crashes caused by distracted driving. Despite numerous public service campaigns and many states making it illegal to even hold your phone while driving, it hasn't stopped many people from doing it.
And that's the bad news about this latest survey of drivers. Americans know they shouldn't be on their phone when they're out on the road, and they're doing it anyway. Phil LeBeau, Nightly Business Report, Chicago.
We begin tonight's market focus with Southwest Airlines, which was the worst performing S&P 500 stock today. The carrier announcing that a key revenue metric could slip in its current quarter. The airline did say passenger traffic improved by almost 14% in November. Nonetheless, shares tumbled 9% to 45.04. Fairchild Semiconductor has received an unsolicited buyout offer from an undisclosed buyer. Bloomberg reports that a group led by China Resources Holdings is the bidder. The nearly $2.5 billion offer trumps an agreed-upon deal Fairchild had with ON Semiconductor. Shares rose 5.5% to $20.62. And in other merger news, Norfolk Southern rejected Canadian Pacific's revised merger offer, calling it inadequate. The new bid attempted to ease concerns that the railroad deal would be shot down by regulators. Norfolk Southern tumbled more than 5.5%. Canadian Pacific off by more than 3%.
Eli Lilly is hiking its quarterly dividend by a penny to 51 cents a share. The drug maker's payout will be made March 10th. The yield is about 2.3%. Shares rose a few pennies to 86.41. Meantime, MasterCard will raise its dividend, and the firm also announced a new buyback program. The new payout is 19 cents a share, and its repurchase plan adds nearly $800 million to its existing buyback program. Shares rose in initial after-hours trading, as you see right there. During the regular session, the stock was a fraction higher to close at 98.18. Morgan Stanley will cut 1,200 jobs. A good portion of those positions are debt and commodities traders as well as salespeople. The bank will take a $150 million charge to cover severance expenses. Shares fell nearly 2% to 34.06. And Smith & Wesson reported late earnings that topped estimates. The gun maker saw sales rise 15% in its most recent quarter. Shares were volatile after the close. During the regular session, the stock was almost 5% higher to $21.39. And coming up, a new investigation into the firearm maker Remington and a surprise decision by a Kansas City judge. Here is what to watch tomorrow on the data front. A report on wholesale trade. The weekly mortgage application numbers come out as well. And Time Magazine will reveal its Person of the Year. It won't be me. That's what to watch tomorrow.
A federal judge in Kansas City has postponed final approval of a nationwide class action suit involving an allegedly unsafe rifle we first investigated 5 years ago. The surprise ruling comes just hours after we unveiled a new trove of documents about the Remington 700, the most popular bolt-action rifle in the world, which the company still maintains is safe. Scott Cohn is here with us in studio with an all-new Remington investigation. Good to see you, Scott.
Good to see you, Sue. Tyler, this class action settlement involves 13 different Remington models, all with a similar design to the iconic Model 700. The allegation is that the guns have a design defect that allows them to fire without the trigger being pulled. Remington maintains the guns are safe, but it wants to put the issue in the past, it says, so it is agreeing to replace every trigger. But critics have argued in court that Remington has downplayed the settlement and the alleged risks. So today, just hours after our new investigation appeared online, U.S. District Judge Ortree Smith said he was sending the parties back to the drawing board because so few people have filed claims. Now, this process, which has taken decades, is a far cry from the process with most products. The Consumer Product Safety Commission, which can order recalls on everything from teddy bears to air rifles, is barred by law from having anything to do with firearms because of the Second Amendment guarantee of the right to bear arms. Arthur Bryant heads the legal watchdog group Public Justice.
I think Second Amendment rights are critically important and need to be protected. But so do First Amendment rights, Fourth Amendment rights, Fifth Amendment rights, all of our constitutional rights. So do our right to life, liberty, and happiness. And if your gun fires when no one pulls the trigger, you can kiss all the rest of those rights goodbye.
Public Justice fights against court secrecy and got the new Remington documents released. You can see some of what they found and more in our new investigation, Remington Under Fire, The Reckoning. You can see that on our website, nbr.com.
So, Scott, did the judge give any hint of what he wanted the parties to do when they go back to the drawing?
Well, he mainly wants them to come up with a better way to notify the public. There is in the settlement a website, there were print ads, some direct mail, but clearly people have not been responding yet, and so he's going to be looking for a more forceful way, a more powerful way of notifying the public.
If you own one of these guns, what does it mean for you?
Well, it means that the settlement, if you choose to take advantage of it, is delayed, but you can still file a claim right away. And in this story at NBR.com, you can see how to do that. And it probably is a good idea, if you're going to do this, to go ahead and file a claim. And then we'll see what the results are. But there are a lot of guns, 7.5 million guns, and Remington already was predicting it would take about 12 weeks to get the repairs done.
All right. Once again, everybody can see it on NBR.com. Thank you so much,
Good to
Scott.
see you, Scott.
And that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you back here tomorrow night.